money laundering. Now, first and foremost, what is actually money laundering? Now, when we talk about money laundering, it basically refers to a process where an entity or individual try to conceal the origin of an illegally obtained money. So this is money laundering. Now, how do an individual or entity conceal the origin of this illegally obtained money? Now, the steps involved in money laundering. The very first step is placement. Now, under placement, what the entity or individual is doing is basically to put this illegally obtained money into the financial system. So what they are doing is that they are mixing this illegally obtained money with a legitimate business. Usually, these legitimate business that are chosen are one that is cash in nature. After they have placed the illegally obtained money into the financial system, the second step is layering. Now, under layering, what they are basically trying to do is to cover up the trail of this illegally obtained money, so that we will not be able to identify where is the origin of the money. This is being done by going through a series of transactions so that the origin of the money is disguised. And the final step in money laundering is integration. Now, under integration, what we are basically doing is to convert the money into legitimate form. So basically, this money are then used to purchase property, financial instrument, or simply to spend. So what are the offenses under money laundering? Now, first, an individual who actually acquire, possess, or even conceal a criminal property is basically making an offense under the money laundering. So it is illegal for a person to acquire, possess, or even conceal a criminal property. Even if the person is merely facilitating in the arrangement to acquire a criminal property, this is part of a money laundering offense. So as an accountant or auditor, we have to be very careful not to get involved with facilitating in the arrangement to acquire a criminal property. Number two, accountants has to be very careful because failure to report any knowledge or suspicion of money laundering activities is also an offense. So in the event or during the course of audit, if the auditor has come across knowledge or suspicion on money laundering, they have a duty to make a report to the relevant authority. And finally, the third offense that an auditor or an accountant is exposed during their course of work is tipping off. An auditor must avoid tipping off a client about their report on the suspicion on money laundering. But do be careful, because if an auditor discourage a client from doing illegal work, that is not deemed an offense. Discouraging a client from being involved in illegal activity and tipping off are two separate matters. Okay, so given that an auditor or accountant are exposed to great risk of money laundering offenses, ACCA has come out with anti-money laundering policies and procedure. So there are several aspects. The very first one is in terms of internal control. Now, when we talk about internal control, so we are basically looking at the role the firm plays. A firm must conduct regular training for its staff on money laundering, especially on the aspect of proper client identification procedure. Staff must receive a clear procedure on how they should proceed to report suspicion on money laundering activity, and also the appointment of a money laundering reporting officer where staff can channel any report on suspicion to. Besides that, client identification, matters such as know your client, customer due diligence, these are important training that must be carried out. So during all this, know your client and client due diligence process, it is essential that we are able to identify the client, who are the owner, the beneficial owner, the directors of the company. So all this can be verified through the company's certificate of incorporation. We can also look at photographic identification such as passport, but that is only relevant if the client is an individual. It is important that we look at the nature of business for a particular client, because it is essential we ascertain whether the business of the client makes any commercial sense, because we want it to be avoided from being used as an illegal front. Verifying the registered address of the client is important. This can be done through the company's letterhead. Now, another aspect of anti-money laundering policy is in terms of record keeping. So what happened here is at the end of an audit engagement, basically it is important that we keep the records of the client for the next 5 years. This is to ensure that all the audit trail is available in the event there is a need for it. Another aspect of the anti-money laundering policy is recognizing suspicion. Now, actually, suspicion is more than just a speculation. Suspicion is only lacking in terms of evidence. Now, any transaction without economic or lawful purpose should raise a suspicion. And it is the duty of the staff to report to the money laundering reporting officer of the firm. Finally, tipping off. So members must be reminded about their duty to avoid tipping off any client on money laundering report that is made against them. So basically, these are the policy of anti-money laundering policies and procedure by ACCA. That's all for this Revise With Me video.